I'm buying one of my favorite stocks before they report earnings in just 2 days. This will be my first time buying it in so long because it's trended down to the point where it's a bargain compared to what analysts predict for the future. The stock is literally trading at 50% below its fair value and price targets, and their next earnings looks extremely bullish with a 20% expected move. I'm not just going to buy straight up shares, I'll actually make more than double that if it goes well. Let me show you guys my entire game plan and how much I expect to make from this stock. Like always, drop me a follow. I post these videos every single day completely for free. Send this video to anyone who you want to see making money in the stock market. I always put you on for free, so you might as well do the same for them. Stock is Upstart, that is ticker symbol UPST. Not to be confused with UPS, which I made over 10% on last week. This one's actually significantly more volatile, and even though it's currently at about $50 right now, it was trading for $400 back in 2021, and now I don't think it's going to hit $400 very soon. Their next earnings are looking very good, and they've consistently been beating their expectations for over a year now. If they match or beat these earnings, it could be a huge catalyst to help reach that price target. I did say it was incredibly undervalued at these prices, so you might be wondering, how undervalued are we talking? It's over $70, that's over 50% of the current price, and TradingView is usually the most conservative when it comes to price targets. The average consensus is a little bit higher, almost $80, but I'm sticking with TradingView. I want to play it safe. I'm definitely liking what I'm seeing, but it doesn't end here. It could be a very good long-term investment for the future to keep outperforming the market. According to optionslam.com, they're expecting an 18% move for their earnings. But if we were to buy calls, even if it went up 18%, we would still only make about 100%. That is a terrible risk-reward ratio. That's because the stock could fly. It could go up 5, 10, or 15%, and you'd still be stuck at like break even. Where if it goes down any bit at all, you will also lose a lot. So I'm not touching any options and I'm not getting in on shares. Let me show you what I am doing. The company just came out with a leveraged ETF that tracks UPST but times 2. Following me for a while, you know I like using these leveraged ETFs and I've made so much money from them. I'm going to be watching Upstart very closely for an entry on these leveraged shares. This is incredibly volatile. You can't just be getting in at a random time because then the earnings could go well, but you're still break even. In my community, I will alert exactly when I get in as well as a game plan. Of course, this is just one of the 10 stocks I'm buying right now. If you want this full list, comment the word trade in the comments below and I'll message you.